Good afternoon, this is Sean Golden with Golding & Golding, here to discuss the basics of how the U.S. wants to tax you on your non-resident ordinary account in India. NROs, right? We have different presentations on NREs and FDs and PPFs and things. It's essentially the same, but let's go through the basics. The U.S. taxes individuals on their worldwide income. It's citizen-based taxation. It's a bit of a misnomer because it doesn't just mean citizen, right? It means U.S. citizen, legal permanent resident, aka green card holder, foreign national who meets the substantial presence test. If you fall into any one of those three categories, the U.S. is going to tax you on your worldwide income. So if you're an Indian citizen living in the U.S. and you're a U.S. person, you've still got assets, income in India. You're going to, one, have to report the income and pay U.S. tax on it unless you qualify for a foreign tax credit. Or two, you're going to have to report it on various different forms, FBAR, Form 8938, etc. We'll get to that in a bit. So a lot of clients that we work with have NROs and NREs and FDs. Your NRO is your non-resident ordinary account. Basically, it's for income that's earned in India for non-resident Indians. It could be in foreign currency or rupees. Baseline perspective is that it's taxable. Now, unlike the NRE, the NRO is taxable in India. So when clients come to us with NRO accounts, they may already have paid tax there or had it withheld, so they may have a foreign tax credit. Practice tip to keep in mind. Oftentimes what will happen is a lot of our clients will have an NRO. In India, there's taxes being withheld, but it's so low that the tax is just, it's not withheld or it's refunded. So if that's the situation you're in and you're going to do one of the filings in the U.S., you don't want to claim a foreign tax credit generally for income that you didn't pay tax on overseas, or you pay tax on it and you already received a refund for it, because then you don't really have the taxes paid. In addition, you also have to report the NRO. There's various different reporting requirements, but since the NRO is really just a bank account, only two main requirements are the FBAR, Foreign Bank and Financial Account Reporting, FinCEN Form 114 is called, and Form 8938, which is for the Foreign Account Tax Compliance Act, used to report accounts, assets, things of that nature. If you have prior years in which you haven't reported the NRO and possibly other assets like the NRE, FD, DMATs, PPF, insurance policies, etc., you may want to consider getting into one of the offshore compliance programs. There's many programs available. If you're willful, you can't certify under penalty of perjury that you're non-willful, you would do VDP, Voluntary Disclosure Program, which is for both offshore and domestic. If you're non-willful, you have many more options available to you. You've got reasonable cause, delinquency, streamlined filing, streamlined domestic, and streamlined offshore. We have lots of free information available on our main websites and our sub-websites. Main website is goldenlawyers.com. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.